Let's break down Apple stock in a few minutes time. Part 1, price action and technicals. Apple stock has shown great relative strength over the last year and over the last decade. For the year, it's up nearly 2%. The S&P 500, on the other hand, is down near 15%. For the decade, it's a 10x. The S&P, on the other hand, 265%. And the Nasdaq coming in at around 800% returns for the last decade. When we look at the daily chart, Apple set a higher low, while on the other hand, the overall market during the most recent decline set a lower low. In comparison to other mega cap stocks such as Google, Microsoft, Amazon, and Meta, Apple is the only stock out of this group to move higher following its most recent earnings report. Apple is the largest component of the S&P 500. So more or less, where Apple stock goes, the overall market will go as well, which provides a unique situation because from a technical standpoint, Apple stock and the overall market have similar upside. If you take a look at the weekly chart for Apple, it broke its uptrend. The bottom line of that upward channel will then act as future resistance. That's around $165 a share. In addition, if you take a look at the upper trend line for the downtrend that Apple has been trading in, that is also at around $165 a share. From the current share price, that's a 6.5 increase to the upside. The market upside for the S&P 500, as we discussed in prior videos, is around $4,100. That's a 5% upside based on the current price of the S&P 500, which is relatively similar to Apple's upside at 6.5%. However, this can all be undone if the Fed's likely hawkish tone on November 2nd spooks the bond market, because the biggest driver of stocks right now, without a doubt, is bond yields. So November 2nd will be extremely important and a huge hurdle for the overall market, including Apple stock. Part 2, the valuation. Apple by no means is cheap from a valuation perspective. It's expensive compared to other mega cap stocks, and it's also expensive compared to itself. The current forward-looking PE multiple on Apple is around 25. Its 5-year average is 22. Therefore, Apple, based on earnings, is more expensive today than it typically has been over the last 5 years. This is concerning to me because the market right now has far more uncertainties, and the possibility of a slowdown in consumer spend once the rate hikes from the Fed work their way into the real economy is high in my personal opinion. This can lead to an earnings decline in Apple and a multiple compression. That's a double whammy and leaves a lot of downside risk for the stock currently at these prices. There are 3 main reasons why I believe Apple stock has not seen its multiple come down. The first reason is the quality of the business. The second reason is the amount of cash and short-term investments it has on its balance sheet, which is roughly 48 billion US dollars. And the third reason is its weighting on the S&P 500, which is the most weighted stock, which allows it to benefit from net inflows into the overall market. Those 3 factors make Apple stock somewhat defensive, and therefore hedge funds and institutions have poured money into Apple stock during the rough times and uncertain market we have today. However, the higher valuation means there's more downside risk to Apple, but the factors we mentioned might make it so that downside risk is never actually realized. Part 3, the conclusion. For trading purposes, if the market can get past the FOMC meeting on November 2nd and the midterm elections unscathed, there is more upside in Apple stock in my personal opinion. It can head to $165 easily with very little resistance in the way. For investing purposes, the valuation is stretched and there is significant downside risk. I personally wait for a pullback, which in a bear market is likely, and you might not have to wait long to get that pullback. But all in all, the past performance, the current performance, and the quality of the business makes Apple an attractive stock for investing. Trend is your friend until trend is broken. And right now, trend remains intact for Apple stock. The trend is that Apple outperforms the market on the way up. The trend is that Apple falls less when the market falls, which it has done as well. For long-term investing, that's what you want. You want to beat the market to the upside and you want to be protected to the downside. And that makes Apple a great candidate for a long-term investment. Now, if you're interested in trading stocks and investing in a brokerage that has $0 in commissions for stocks and options, consider using Webull. The current promotion is 12 free stocks valued up to $30,000. And if you refer someone to the platform, you will also get up to $5,000 worth in Apple stock. If you deposit $100 when signing up, this channel will be rewarded with a free stock. I appreciate it if you do that. That money will go to help growing the channel. That concludes this video. Comment down below on your analysis of Apple stock, hit that follow, and I'll see you on the next video.